Hello everyone, Taylor Johnson here. I'm back again with a look at the October market report for the Washington, D.C. metro area. And we have some interesting things to look at. One thing I'd like to note is that there has been a really sharp decline in the number of sales. And maybe in terms of the Bright market area, there's a little more for our area than there is for Philadelphia or Baltimore. You can see here that closed sales are down 35%, yet the median sales price still continues to rise. Pending sales are down, new listings are down, active listings is up, and months of supply up 23%. But that's still, it's still at 1.4%, 1.4 months. Which is super low. 3 months is a really tight market. So what that means is it's still a seller's market, and homes are still going fairly quickly. So it seems that both buyers and sellers have hit pause as high mortgage rates have gone up. They're now a little over 7%. We do have we do have strategies for getting that rate down under 7%. So be sure you talk to me or your agent about that, because you could have a buy down. There are maybe some other strategies you could use to lower your rate. New pending sales are down, and this is a steep drop off, the steepest since 2007. Inventory is expanding, but it's not expanding because we have more listings. It's expanding because there are fewer buyers, fewer sales. But home prices still continue to rise, and some markets like Arlington County and Montgomery County did see a little bit of a price decline. We also see that the home demand index has declined. It's now around 90, down from 127 a year ago. So clearly the demand has dropped quite a bit. There's still more demand than there is supply, which is going to have a long-term effect on driving prices up. What it will do in the short term, we don't know. Here's a market outlook during the last 2 months of the year. Home sales continued to hit new lows. Mortgage rates around 7. The prospective buyers and sellers are in the wait-and-see mode, putting off discretionary modes. Home prices, because they ran up so much during the pandemic, they're still higher than they were 3 years ago. Encouraging news for the market is the underlying economic and demographic fundamentals in the Washington, D.C. area are strong, and the region's housing market should fare better than others if the national economy goes into a recession in 2023. It's good news, right? Now, another thing to think about is, in a recession, how does the Federal Reserve respond to a recession? They lower interest rates, which then lowers mortgage rates. And what happens with lower mortgage rates? More buyers come into the market. As more buyers come into the market with a shortage of inventory, what's going to happen? We're going to get into very competitive bidding. We're going to have prices escalating over asking, and we're going to have a difficult time for people to get in. If you can stomach the hurt now with a high monthly price at these current mortgage rates, it's maybe better to buy and next year refinance, or next 2 years when rates go down. In October, there were 4,000 home sales in the Washington area, down 35%. Home sales activity has been sluggish at the end of summer as high prices, rising mortgage, low inventory has happened. Median sales price still at 2.8. Washington area, the condo prices were up the most, rising 8.2. This is really interesting because over the last 4 or 5 years, condos have been relatively flat. So during the pandemic, we found that home prices, individual detached or semi-detached homes, skyrocketed related to condos. Condos were very flat. Now it seems that the perception is that condos are where the deals are, and people are going into condos more than they're going into homes. But it can also just be a matter of what's affordable, right? I mean, if you have $400,000 or $500,000, you want to live in DC, your options for a home are pretty limited. If you look at a condominium, you've got lots and lots of options. So that could just be a factor of that. What we're also seeing is that days in the market have increased. They're now around 15, where they were about 6 some time ago. So that's good for a buyer. It gives you a little more time. And for seller, it just means if you're putting your market on now, it's going to take longer to sell. New pending sales were down a staggering 40% in October. Staggering is a very strong word. Across the Washington area, there were just 4,000 new pending sales, which is the lowest since December 2019. Year-over-year decline is the steepest since December 2007. So clearly something's happening. We're seeing a shift in the market. Active listings. At the end of October, there's a total of 7,900 active listings, which means that inventory is up a little bit. But there is a surge of detached homes on the market. Supply increases are being driven by a pullback in buyer activity. A pullback in buyer activity, not an increase in new listings. We've actually seen a decrease in new listings. Despite the recent uptick, inventory is still lower than it was 3 years ago. 35% lower than it was 3 years ago. So here's the real problem. We just are not getting enough homes on the market, whether it's new homes or resale of existing homes. The inventory of homes is lower than it was 3 years ago, right? It's lower than it was 5 years ago. The demand for homes has remained fairly consistent. So what happens when there's less supply and consistent or higher demand? It's going to drive prices up in the long run. Local markets. New pending sales dropped significantly in these areas. Others were taking a wait and see. Inventory is still low. However, some markets have had a dramatic increase in the number of active listings. Supply fell in Arlington, Alexandria, and Montgomery. Because supply is still low, prices are still rising in most of the region, though the pace of that growth has slowed, and that is actually, I think, a good thing. It's a very healthy thing to have a slow rate of increase. Closed sales, as we looked at earlier, are down in these areas. They're down the lowest in Washington, D.C. Next lowest, I think it would be Falls Church City, though let's leave that out because there are only 13 total sales. So maybe Prince George's County, right? So that means that things are still fairly active there and still perhaps somewhat competitive. Median sales price, you can see, has gone up in most of the areas. And again, you want to be careful where you're looking at because Falls Church City is such a small pool. That number could be affected by the sale of one house. We have new listings. Here's the key thing, right? New listings are down, 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 down. New listings are down. If you are thinking about selling, now could be a really good time. Please talk to me. I'll give you some advice about what we can do, whether or not we can get you into another home. I know that's a concern for many people who are selling. So I can tell you what your options are. And months of supply here, again, 3 months is seen as a tight market. Washington, D.C. is bumping up against 3. The region as a whole is 1.4. Prince George's County 1.5. So most of the area is around 1.5. So that means it's still very much a seller's market. We are able to negotiate a little more right now. We are able to get some help from the seller for closing costs and so forth. But sellers are still dictating quite a bit of the terms. All right. And so that's the October. Again, my name is Taylor Johnson. I am a realtor with Keller Williams Capital Properties. I'm part of the Eng Garcia Team, and I'm here to be a resource for you. If there's any way that I can help you, information I can give you, maybe you're looking for contractors, or you want some interpretation of these results, or you'd like to have the report for yourself to peruse, please contact me. And if you find this helpful, like it and subscribe to my channel, and there's more to come. The home demand index captures buyer signals, and this is a really good way to look at what's going on. So the demand remains strong. It's down, but it's strong. Supply remains low. That means over time we're going to have rising prices. Please talk to me if you're a buyer about some strategies we could use to help you buy a home, to make it more affordable. There are certainly ways to reduce that monthly payment. Reach out to me. Have a great day. Thanks for watching. Bye now.